Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. Second day of June, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen, culminating with the last 2 days having jobs reports in which, in both cases, we have seen estimates come in completely off of the mark. Yesterday's estimates caused the precious metals complex as a whole to trade dramatically lower, and today's jobs report moved the needle to the upside, with gold having a tremendous rally along with U.S. equities. Gold closed at $1281.40. Net change on the day is $11.40. Actually, it is still trading. We're going into settlement as I speak. The low on the day has been about $12.61 and change, with a high of $12.82. So as you can see, we are under $1 off of the high on the day. Net change on the day, almost 0.9%. Over to silver. Silver also staging a very, very nice move in the market, trading at $17.51, putting it up approximately 23 cents on the day. The low on the day has been $17.11, with a high on the day of $17.58. Traders, no doubt the last couple of days have been a sheer roller coaster ride, with the jobs reports coming out yesterday, the ADP report, today the U.S. labor report. Estimates in both cases, big misses, one well over and one well underestimated what the actual numbers were. If you recall from last week, we talked about the fact that we identified a compression triangle, and we were sincerely looking for a major breakout in terms of pricing in gold. We cited the series of lower highs and higher lows. We also cited last week the fact that we had a golden cross, meaning the shorter term 50-day moving average crossed above the longer term 200-day moving average. Well, here we are a week later in terms of the weekend review, and we have seen this market increase substantially, over $20 this week, considering the fact that this market really began trading and broke out on Monday, and that's after being trading at a low of about $12.53, $12.55 in that area. Now moving past 81, we've seen this market have a substantial gain. Now there's a couple things that I believe are really significant. The most significant thing is that we have taken the former level of resistance, which was sitting at around, call it 1260, and it is based upon these series of tops here, as well as our longer term moving average. We have seen that price point get taken out, and I believe that 1260 is now effective support. If you look at the recent lows that we've seen in the market, they come just shy of that price point. The second thing is we are now within reach of taking out this yearly high, which sits at $12.97, and I believe we certainly could see that on activity next week. Traders, we are long from $12.64 on this leg. We pulled profits last week when we got out and pulled 3,500. Now we have profits in this particular leg of the trade. We're long at 64, market closed at 81. We will effectively look to move our stops up at the beginning of the week. So obviously maintain your current long position and maintain your current stop until we move it up next week. So traders, as far as silver goes, we were effectively stopped out and pulled profits in yesterday's trading activity. If you recall, when we rolled over our June gold position to August, we were already sitting in a July futures contract, which was most current contract, and we had no need to roll that over. So we got in this market roughly at 1632. We continually raised our stops up, and during yesterday's pretty wild gyrations, you can see that expressed in this daily chart right here. We had the market actually touch just below $17 per ounce. We had moved our stops to just below 1710, so we got in at 1632. We got out roughly at 1705, and we pulled a little bit over $3,600 per contract on our silver trade. Most noteworthy in terms of the close today is the fact that we broke finally above a 50-day moving average. We're still slightly below the 200-day moving average, but my sense is if we see a further rise in gold next week, which I am expecting, we should see silver follow suit along with it, and we will look to re-enter a long silver trade. Stay tuned for that. We will, of course, send out a special trade alert to that effect. In other markets that we look at, we had the S&P, Dow Jones Industrial, as well as the NASDAQ closing at new all-time record highs today. Dollar index trading under some pressure today. First to the dollar index, lost about 0.5% of value at 96.62. Over to the equities market, substantial upside moves, taking them to new record highs, 21,206. That's the close in the Dow Jones Industrial Average. Standard & Poor's also gaining about 0.4%, closing at 2439. That's also a new record high. And lastly, the market or index that's been on fire is the tech-heavy NASDAQ Composite, closing up almost a full percentage point higher at 6305. It seems like only days ago that market broke above 6,000. Tremendous pressure placed upon the U.S. dollar. U.S. dollar has been trading under pressure really in the big picture since December of last year, January of this year, after hitting these tops just below 104 and now trading dramatically lower, breaking below 97. If you recall from earlier this week, we have been looking at our official target has been 96 on the dollar index. We are now roughly 62 points from that initial price target. My belief is that we will probably see further weakness or further decline in the dollar index next week. Over to U.S. equities, staging incredible moves to the upside. We can certainly see that we have closed at new all-time record highs. First, within the Dow, 21,206. These are weekly charts, so these weekly charts are really conveying, without a question of a doubt, the kind of move we've seen. This is our former highs right in here. That's, of course, the industrials. When we look at the Standard & Poor's, that also really dramatically traded higher, new all-time high, 2439. And then lastly, the tech-heavy NASDAQ. You can see these last couple of weeks have been dramatic. Traders, based on what we have seen, I am looking for higher pricing in U.S. equities next week, barring any new fundamental event that comes out to change that. Traders, we have faced a whipsaw market over the last couple of days in regards to the precious metals, with yesterday's drawdown and today's upside surge. We pulled profits on our silver position as the market came down yesterday. We have remained long, this being the second leg of our gold trade, in which we pulled profits the other week, taking out about $35 from our trade, or $3,500 per contract. We did that as we rolled over from June into our August position. We are currently long our August position, and we are long at 1264. That being said, the market closed at 1281. We will look to trail our stops up early next week. They're currently at 1255. We did move them up the other day, but I think that we have a realistic opportunity to see a gold prices challenged at 1297, which is our yearly high. We will have to see if that in fact happens. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.